Okay, Gianluca, thanks for joining us here in Barcelona and speaking over the 2 days. Do you just want to introduce yourself and what you're doing in your current role?
Yes, I'm Gianluca Minieri. I am the Global Head of Trading of Pioneer Investments based in Dublin.
Brilliant. And just thinking ahead to 2015, what are you predicting as being your biggest challenge and what are you putting in place to overcome that?
Well, I think it's clear from this morning discussion that regulation is the main concern for everyone. I think that MiFID II is already approved, and while there are a number of elements that are still not agreed, let's say, by the regulators, this is a big area of concern for us. I think everyone is talking about equitization of fixed income markets, and we feel that there are elements of the equity markets that we like and that we would like to transpose into the fixed income markets. There are other elements of the equity market that we don't like and that have, let's say, showed areas of, so that are heavily problematic that we wouldn't like to transpose to fixed income market. So if equitization of fixed income market means to enforce full transparency across asset classes, regardless the liquidity of the instruments, regardless the nature of the order, regardless the market condition, then we are against it. And this is a big concern for us. We're a big asset manager, we work on behalf of our clients, and we also work with illiquid instruments. So our main area of concern is that the regulators also take care of how to address and how to create liquidity for those instruments.
Okay, and you speak a lot about regulation and it's been a big topic here. You know, we did our benchmarking survey with a lot of your peers, and when we asked them about regulation, the top thing that came out was it's caused them rising business costs. Would you agree that that's been the top issue for you, or would you say that you've been impacted in other ways by the regulation?
Absolutely. I mean, the regulators is only trying to extend to fixed income market the same rules that we have on the equity markets. The reality is that fixed income and equity are two different things, and we cannot have the same rules. So transitioning fixed income market into an openly accessible and executable firm prices market will just worsen liquidity, because market makers will not know how much risk are they taking on their book. And it's very difficult for market makers to make tight price when they don't know who are they dealing with and how much risk are they taking on their book. So this will lead to a number of unintended consequences. The first one can be that they widen the spreads because they will price on a worst case scenario, and that will increase the cost of trading. But there is also a worse situation, which they might just step away from the market because they might feel that that business is not profitable for them anymore.
And do you feel that the regulations in place within fixed income and those that are to come into play have helped increase transparency?
If we consider transparency as a philosophical objective, yes, but unfortunately transparency cannot be an objective by itself. Transparency needs to have an objective, and the objective is to bring benefit to the end investor. We do not feel that enforcing transparency across the board, regardless, the instruments and the asset classes, will bring those benefits to clients. So the potential increase of cost of trading is a reality. This will happen.
Yeah, and a lot of your peers have mentioned about doing more buy-side to buy-side trading. Is that something that you have found that you're doing more of? Or what is your feel of that approach? Of
course, this will happen. There is a reality. The reality is that the MiFID II, CRD4, and all the other pieces of regulation have completely changed the trading landscape. So for the sales side, it's become increasingly more expensive to hold inventory. And that has brought to a situation where the majority, 97% of the bond inventory in the world, is actually held by the buy side. So for me as a buy-side trader, when I buy or sell a bond, the question is just to find another buy side on the other side that can actually buy or sell the bond. And I only need a broker or a market maker just to stay in the middle and help me to execute the trade. So the question is, how much value those brokers are bringing to us. So really the buy-side to buy-side trading is an opportunity that we are thinking, and that's why over the last year there are a number of buy-side initiatives that have been launched. We as Pioneer have taken always a proactive approach. We are part in many, not most of these initiatives, and the idea is really to try and create a network of buy-side that can actually execute their trades without the intermediation of a broker. Now, I have to say that since we have started to discuss this initiative, the sell side has been very, very interested in joining and supporting and sponsoring financially these initiatives, and this is clear indication that they are valid. It's a valid concern, you know, for them as well.
Yeah. So obviously the broker relationships that you have are changing dramatically as a result. You know, what have you found have been the benefits that you get from the sell side's approach to you now that they see that you're doing more buy-side initiatives? How has your relationship with them changed?
The relationship with the sell side has changed. Certainly there is more cooperation between the sell side and the buy side in trying to address the challenge that MiFID II is bringing. But as I said during this morning panel, I always very clear on this point. This has been led by the buy side, not the sell side. I think the sell side the reality is that over the last 5 years, the buy side business has been growing steadily in terms of asset under management, and the sell side has been shrinking. And the power has been shifted in our favor. That's a fact. It's not because we just want to show off, you know. That's a fact, and I think the sell side is feeling this pressure. They know that their business are going to be reorganized, and they are now willing to engage with us in understanding how we can address the challenge. The main challenge is how we can disseminate information in a most efficient way, because sometimes a big difference compared to equity market. Some bonds might deem to be illiquid only because you don't see them on the screen, only because you don't see prices, only because you don't receive regular update on the inventories. But they might be absolutely liquid. You know, there might be a lot of inventories that are ready to unfreeze if we only had the information, you know, on those inventories.
Okay, and thinking ahead then with your crystal ball and your predictions, what do you see lying ahead as your biggest opportunity and your biggest avenue that you want to explore next year to get the most out of the fixed income industry and how it's evolving?
Well, as I said, I strongly believe in the buy-side initiative that we are working on. There has been a huge work from a project management perspective that we have done together with a number of other buy-side. It's still a work in progress. As I said, a lot of sell side have now joined the project, which is a good thing. We don't want to exclude, you know, the sell side because they are bringing a lot of values to the business as well. A lot of vendors are joining this initiative because one of the biggest challenge that we have and we cannot solve by ourselves is the technology. So in order to compete over the next 20, 30 years, there will be a lot of investment, a lot of IT technology investment needed. And nobody in the industry can afford those investments by itself. So everybody is looking for share technology architecture, utility, and clearly the sell side and the buy side can work together, you know, to share the cost of such initiatives. So really, we are looking for a more efficient market, maybe in a more buy side to buy side format, with a review role, let's say, of the sales side, less market making, more value added in the overall fixed income trading.
Brilliant. Well, Mike, thanks for your time, Gianluca, and your insights, and thanks for joining us, and enjoy the rest of your time at the conference over the next day.
Thank you, you're very welcome.
Thank you.